Hello, good evening, and a very warm welcome to the conversation and reflection session Beyond Price Stability, Do Central Banks of the Future Need a New Mandate at Inequality 2020. Before we start with our session, we want to do a minute of silence. And we want to do a minute of silence to think about the terrible stabbing that happened this morning in Nice. So let's please all take a moment, take 1 minute to think about the victims of this terrible tragedy today. My name is Florian Ranft. I'm the head of Social and Economic Transformation at DPZ, and I'm your host of tonight's sessions. As we heard yesterday, at Inequality 2020, we want to talk about visions of the future, because transformations are hard to shape if we don't have any ideas of what the future might look like. So this is how we want to use Inequality 2020 and bring the future back to democracy. When we talk about financial markets and central banks, it is quite clear what their role and function is. Any standard economic textbook will tell you that central banks are lenders of last resort, that they are there to keep prices stable and to regulate monetary policy, and that they function best when they remain independent from government and politics overall. Today, we invite you to question and challenge this textbook role of central banks and talk about a possible paradigm shift in the role of central banks. And I'm delighted to have with us some of the most renowned experts in the field of European and German economics and financial markets. So, a very warm welcome to Daniela Gabor, who is Professor of Economics and Macrofinance at the University of the West of England in Bristol. She holds a PhD in banking and finance from the University of Stirling, and her research focuses on shadow banking activities and their implication for monetary theory and financial markets. With us today is also Adam Tooze, a true connoisseur of European and global economics and financial markets, and a political commentator on European politics. He is by trade a British historian who is professor at Columbia University, holding the Shelby Colum Davis Chair of History, and currently serving as the director of the European Institute. So, Daniela and Adam will have a conversation between them for the first half an hour of the session. After that, you who are joining us in the Zoom meeting will have the opportunity to discuss some of their thoughts and reflections in a 15-minute breakout session. And after that, we will return to the main room here and are joined by Philippa Sigl-Glöckner and Christian Odendahl for another 30 minutes of reflection on what has been said and to break down how we can understand all of this in the German context. So please post any questions that you have into the Zoom chat. We will pick them up later. But for now, we're living in an extraordinary time. It's probably an introduction that's been said and that you've heard quite often in the last weeks and months. But how should a progressive monetary policy look like? And how should central banks become and get a clear political mandate to tackle some of the huge challenges of our time, including, for instance, the unfolding social and economic crisis, addressing some of the existing social and economic inequalities or the climate crisis. So Adam and Daniela, the floor is yours, and I wish you all a wonderful session and really looking forward to your thoughts.
Thank you. I'll get us started. Let me say first good evening and start by saying that it's a very exciting time to study central banking. And I think central bankers would also agree that it's a very exciting and complicated time to be a central banker. What we are seeing today is that the usual old tools of central banks are obsolete, that some of the common wisdoms and theoretical frameworks that central banks used do not longer hold. And it would seem to many of us that central banks are moving towards a progressive direction or in a progressive direction. And we discussed with Adam three main areas that we want to first address today as a sort of diagnosis of how quickly things are changing in the field of central banking. And we will address these three areas are the relationship with the governments, that is the foundations of the basis of central bank independence is somehow becoming more and more elusive because the relationship with the sovereign is changing. Then we will discuss the green turn in central banking, the way in which central banks have become unlikely actors and drivers of the fight against the climate crisis. And then we'll set these two issues within the context of the coordination between large central banks in a world that is dominated by the US dollar and functions under the US dollar hegemony. I'll get us started on the first topic of the relationship between central banks and governments, with a sort of couple of observations of why I think that it is this relationship is changing quite significantly. Now, if you read the financial media, or if you look at the statistics and the policy actions that central banks have taken over not only the last 10 years, but particularly this last year throughout the global pandemic, many observers would claim that we are living through a policy revolution. And that policy revolution consists of a coordination between fiscal and monetary policy. This is used to where we were left, but I'll try again. So I was talking about the policy revolution, the way in which there is coordination between the fiscal and monetary policy in response to the COVID-19 shock. And let me focus on the example of the ECB, because that's very close to home. Unlike the 2008 global financial crisis, where the ECB was sort of a latecomer to the idea that it has to work somehow hand in hand with the government, this year, throughout the pandemic, the ECB has bought more government debt than, for example, the Bank of England or than the US Federal Reserve. 70% of all debt issued by governments in the euro area have been bought by the European Central Bank. Now, this is very unusual in the sense, and it has been very controversial in Germany, and we can talk more about this controversy. It's unusual because it somehow challenges the premise of central bank independence, but it's also a very clear recognition that that the central banks cannot leave governments, or the ECB cannot leave the Eurozone governments to fend for themselves in this crisis, whether those governments are the governments of Germany or the governments of Greece. The last time that the ECB left governments to fend for themselves in a crisis, it nearly broke the euro during the mandate of Jean-Claude Trichet. And then when Mario Draghi came and promised to do whatever it takes, that was a promise or a commitment to coordination. And that commitment to coordination was conditional on the fact that the governments that the ECB was going to help had to subject themselves to conditionality or to austerity. This time around, there is no such conditionality. This time around, under Christine Lagarde, who promised to close the gap, to target the spread between Germany and other European government bonds in the euro area, is not conditional on any measures in particular. Now, of course, we have to ask ourselves, is this the revolution that some financial market participants claim it to be? Are we returning to an age of Keynesianism, where the monetary policy is subordinated to fiscal policy decisions, because that used to be the framework of coordination between central banks and governments. And I would say that it's not really a revolution yet. The ECB, like many other central banks, is preserving the autonomy to set the terms of this coordinating exercise. It's the one that is dictating the terms, the length for which this coordinating exercise will last. And that, to my mind, raises several important questions, because it leaves European citizens and the economic recovery from this global pandemic, it leaves it vulnerable to how a technocratic institution reads the necessity of continuous coordination, reads the necessity of continuing to intervening government bond markets and to keep interest rates low, to give governments room for maneuver to respond to the crisis. And I think we have to note that while this coordination lasts, it matters enormously, because this is the only instrument that the Eurozone in particular has to counteract the asymmetries that are built within the fabric of the Eurozone. And these asymmetries that come from the age of the design of the Euro have created an exorbitant privilege for Germany. Germany benefits during bad times from the crisis, because when economic or financial conditions worsen, then private financial institutions run to the German bond market or to German sovereign bonds, and that puts the other governments in the Eurozone under pressure. And it puts their capacity to spend in a crisis and to respond to a crisis of private demand under pressure. And we know from Italy, for example, that this can generate significant pressures from the history of the Eurozone crisis. And we also know that it has longer-term consequences. For example, it has allowed the German fiscal preferences, the fiscal compact, to be hardwired in the European macro-financial architecture. Adam, I'll leave you now to take from here.
Yes, I mean, I think you're absolutely right. I mean, the historian in me is tempted to say that we should rewrite the entire narrative in support of the move that you want to make, which, in other words, which I take to be, and the crucial thing that you're saying is that this cooperation between fiscal and monetary policy needs no longer to be essentially at the discretion of benign governance on the part of the ECB. It should be understood as constitutive of the integrity and, in some senses, the sovereignty of Europe, right? In the genuine sense that we actually have some agency. And in a sense, what I want to do is reclaim the history of central banking from that narrative that our moderator started us out with, because it's nonsense to say that, you know, central banks were independent so as to guarantee price stability. I mean, this is an event of the last 30 years. I mean, the central banks were, generally speaking, not independent. And when they were independent, it was largely for the purposes of securing the interests of creditors to sovereign states. The classic central banks, say the Bank of England, were independent because they were private cartels of creditors to government. And the moment of liberation comes after World War II, when both the Bank of England and the Bank of France are nationalized and integrated thereby into the state and the fabric of the state, and appropriately integrated into the monetary and fiscal framework. And it's worth remembering that the French essentially had to pass a constitutional amendment to allow the sovereignty of the French Republic to be fractured, enabling the Banque de France to be incorporated into the Euro system. And we, as politically difficult as it may be, and the question, of course, is whether this is the moment to push on this theme. But in terms of framing, as it were, the normatively where we would want this relationship to be situated, the premise of independence, which then grants to the government of the ECB the decision whether to cooperate or not, has to be put in question. And as it were, the integrity and the cohesion of monetary and fiscal policy should be the premise, not, as it were, something that we contingently agree to because the circumstances demand it. I think that's brilliantly well put, and also in terms of, as it were, precisely locating what Mario Draghi's legacy is, exactly as you say, that whatever it takes is strictly conditional on a particular interpretation of how the fiscal history of Europe is going. I think, in fairness to them, they anticipated a series of further moves, which of course didn't come in large part because the EU moves so slowly outside periods of crisis. But I completely agree that the premise of a future progressive constitution for modern central banking should be this integral relationship, not a contingent relationship. And the question, of course, is how we move there. But that is, I think, I completely agree on the goal.
I mean, I wouldn't want to suggest that somehow Mario Draghi wasn't either ambitious enough or delivered enough, because we have to remember that the decision to announce in London that the ECB would do whatever it takes, and that was basically a promise to stabilize Eurozone government bond markets. That was entirely, not many people heard it like that, but this is the promise. That was made against years of resistance from particularly the Bundesbank and other Eurosystem central banks, who viewed the role of the central bank as this apolitical actor who shouldn't be interfering with bond markets, with fiscal policy, because that in some minds evokes the specter of inflation, right? The idea that everything, it's a very Milton Friedman idea, that the moment the central bank starts to buy government debt, it monetizes deficits, it basically validates populists, and it will eventually end in some inflationary disaster that reminds us of the 1929 or the late 1920s. And I think if we think in terms of the future of setting up a progressive framework under which this relationship has to evolve without perhaps central bank independence, this is what we have to ask ourselves. How do we respond to, for example, populists from the right who want to take over central banks?
Well, I think, to my mind, it is indeed a gamble, and what that puts a premium on is a vigorous progressive politics. I mean, if the aim of if the logic of this move that we're making is towards, as it were, questioning independence, and the logic of that is towards politics, then it is absolutely true that, as with regard to judicial politics, it's essentially a formula for eternal vigilance, because there is then no escape. And it is indeed, of course, possible that this sort of power, essentially, then the money power which one is arrogating back to and reclaiming for politics, can, of course, then be directed in all of the directions that politics can direct it in. I think the argument, to me, therefore, this is a risk, and it's a risk that we take for very specific reasons. And the reasons are those of urgency, and not just that of crisis. And I know this is the second point that we move on to, not just that of the immediate COVID crisis or a financial crisis, but the sense that we, in fact, inhabit a historic moment when there are absolutely historic first-order demands on politics at this moment. And one thinks immediately historically of wars, but that isn't our problem. What is our problem is the climate challenge. And to call it a crisis, as it were, compresses it too much in time. What we face is the urgent need for a radical transformation in the material foundations of our economies. So it's a moment of all hands on deck. All instruments need to be deployed. And but the implication of that, as you say, is that, as it were, we have to be continuously and comprehensively vigilant, because we can't, as it were, just hand off this issue and hand it off to a bunch of more or less conservative technocrats who may not do progressive bidding, but at least are not vulnerable to falling into some nationalist populism. That isn't going to work anymore. So the demand on a progressive politics becomes more comprehensive and more complex. Both in a strategic sense, in an institutional sense, but also tactically, in the sense that one has to then also guard against potential manipulations of monetary policy, absolutely, from the reactionary side. But I take it that we're agreed in a sense that the fundamental historic justification for rupturing this, on top of the perpetual instability of the financial system, which has exposed itself, and on top of the structural instabilities of the Eurozone, which you already alluded to, the third, as it were, driver here is climate politics.
Yes, I think that's a good segue into our next topic, which is the green turn in central banks. But let me say something that I think is striking to me listening to you and thinking as a close observer of European and in particularly Eurozone politics, that sometimes central bankers seem to be paradoxically more progressive on certain issues than the politicians from both sides of the political spectrum. For example, I'm reminded of Mario Draghi on several occasions urging more fiscal activism in the Eurozone, and urges that fell on deaf ears because there wasn't the political will to challenge all the complicated fiscal straitjackets that we have built in the Eurozone for a variety of political reasons. And with the climate crisis, we are going to the second, which I think is the ECB is again very paradoxically and in some ways quite surprisingly at the forefront of climate politics in Eurozone policy making spheres, in the sense that it has sort of given up on some very fundamental principles that have guided the ECB's interventions for the last 20 years of its existence. And in particular, I'm thinking about the interventions by both Christine Lagarde and Isabel Schnabel, where both have argued that monetary policy tools, both conventional and unconventional, but particularly the unconventional ones, which imply lending against in long-term refinancing operations against collateral or buying corporate bonds directly from the market, these operations are implicitly subsidizing high carbon assets and high carbon activities. It is a very striking recognition from a central banker to say, guys, we followed the wrong rule, the wrong principle, which is the principle of market neutrality that says you should buy reflecting the existing market structure. The existing market structure favors fossil fuels because markets are failing in pricing climate. And therefore, we are basically reproducing a market failure, and we shouldn't do that for financial stability reasons. So the ECB has framed the climate agenda, the green turn, within the mandate, the existing mandate, which politically is very useful, right? Because then you don't need to go to the treaties and you don't need the headaches that are generated in getting European capitals to agree with each other on what should be the new mandate.
I think this is one of the really interesting developments we've seen really since Paris and the run-up to Paris, which is that, and it's a story that goes all the way back to the 1980s, which is that one of the hopes of centrist environmentalism is that at some point capital wakes up, smells the coffee, and realizes that one of the preconditions for long-run capital accumulation over a horizon of 25 to 30 years is some sort of climatic stabilization. There are going to be factions of capital that are going to profit, as it were, go down with the fossil fuel ship. And there will be different types of disaster capitalism that can profit and from the chaos that will ensue from a series of disasters. But if you're in the business of managing a $4 trillion fund, if you're in the business of actually allocating really large quantities of capital, then the prospect of doing that in a 3-degree world, a world of 3-degree warming, just from a professional asset management point of view, if I may put it that absurdly, it is a nightmare, right? They actually have an interest in stability. And that thought has animated, of course, various types of eco-modernism ever since the 1980s. Various types of centrist green politics have been looking for that coalition that just simply says, look, of course there are going to be some transitional costs, and of course there's going to be structural change, and various types of assets will end up stranded. But surely you understand that the condition for being able to just go on making money the way you want to go on making money is that we solve this problem. Furthermore, there is money to be made in the solving of it. So, and what we've seen, I think, since Paris is really that argument has begun to really take hold of very substantial groups. I mean, Christine Lagarde is still the Christine Lagarde that slavishly subordinated herself to Nicolas Sarkozy in that embarrassing email in 2008. She's still essentially a centre-right politician. But I think she fully understands the logic here. And it's not, this isn't rocket science. This isn't difficult to understand if you look at the IPCC report. So the real question is why did it take the penny so long to drop? But now the penny has dropped. And it is indeed true, as we've seen now with the COVID crisis, which after all is also an anthropocenic crisis, that huge chunks of big business will find themselves out on a limb unless we can stabilize some of these natural risks. And I think that's why we're seeing them moving. It's essentially the same logic as why Mario Draghi could actually pursue a rational macroeconomic policy, because if you come from his kind of background, the massive underperformance of the Eurozone is just massive, it's just hopelessly suboptimal. I'm not even sure whether I would call it progressive. I just think of it as being, mainline macroeconomic management, of which I think increasingly is where the green agenda is too. The question then is, of course, how you harness those kind of interests and what the politics is for maneuvering around them, because it can be more or less reactionary. It can be, as brilliant, you've traced this into the details. The thing is the devil is in the detail, like exactly how are these green classifications being manipulated so as to achieve different types of advantage. But that the central banks are moving in this direction, to me, it's a sign of how serious this problem is now. I mean, that they are now finally moving tells us that this is deadly serious now, and that the clock really is ticking.
Yes, I would very much agree that the ECB, for example, the penny dropped with the ECB much faster than it has dropped with the Federal Reserve for reasons that are pretty obvious given the politics of where the two central banks operate. And the real question, and this is why I opened my remarks by saying that the central banks are seemingly moving into a progressive direction, because the real question, once the green turn exists at ideological or the level of political commitment of the central bank, then we have to look into the details of how this green turn can really be sort of articulated in relationship to big finance capital. And that to me is a very complicated political question, because people in private finance, as you said, who are managing trillions of dollars or euros in big portfolios, they are not dumb. They understand that some of them, I'm sure, care very much about the climate, but there are short-term profitability considerations, and there are long-term strategies as well that say, if you're the first at the table to write up and design the rules of the green game in finance, then you stand to make profits, and you can also make space for greenwashing. And greenwashing is the next big political issue in central banking. What is the responsibility of the central bank in writing the rules of the game as opposed to enforcing rules of the game that have been written already? And that my worry is that the ECB is not doing enough on that front. I mean, no central bank is doing enough on that front anyways, but the ECB is not doing enough on that front because the rules are being written in Brussels by the European Commission in very close, I would say, pretty unnecessarily incestuous cohabitation with big finance. And there is a lot of space for greenwashing there. And that is also raising to me the question of what does green accountability look like in a world where central banks do care about the climate crisis? How do we hold them accountable for delivering on this?
I know that we're posing more questions than we're really answering, but I've got my eye on the time, and I know that we want to move to a breakout phase in 5 minutes or so. So why don't we just put the third issue that we had on the table, which you already neatly have kind of introduced by way of your reference to the Fed. I think it is striking that American players are actually playing a very considerable role in precisely the debates that you're just pointing to, but it tends to be private sector actors. It's, as it were, the Bloomberg faction of American capital, who are very sincerely and very seriously interested in the green problematic and the question of energy transition. And what we've seen is a real discrepancy in the US between the willingness of certain factions, even within the electricity utility sector in the US, to begin moving, because they can see the logic, they can see the strategic logic, they can see the microeconomic logic, because renewable energy options are increasingly just the most efficient, the cheapest. And we've seen a distinct discrepancy with the agencies of government, which have been, in the last 4 years, essentially under a quasi-official ban of talking about climate change as an issue at all. And this, I think, might be a way of moving to the third item that I think we wanted to place onto the agenda, which is that conversations about monetary politics, about the democratic politics of money, have a particular aspect to them, which is that more perhaps than in virtually any other area of governance to which this question of democratic accountability and democratization could be put, money, the global monetary system is indeed a global system. So it is both, it functions beyond the boundaries of nation states or entities like the Eurozone, and it is systemic. In other words, it's massively interwoven, functionally interdependent. And I think this is one of the real challenges for a democratic politics of money, is how we think about this. And one way of thinking about it is, as it were, in a strong sovereigntist mode. In other words, this can be a rallying point. The abuses, the belligerence with which the Americans have been using the undoubted influence of the dollar serves not just, as it were, serves practically, but also politically as a way of rallying opposition and rallying demands for the politicization of money. Because when it's being used by the US Treasury to sanction European companies or to deny essentially the sovereign free choice of European governments or the EU as a whole, then it's easy to see how, as it were, one would mobilize a politics of European money against American money. And that has its value, I think, and there are issues there that clearly need to be addressed. But I think you don't really understand the scale of the problem until you appreciate the massive functional entanglement of financial actors in the world over, right? The hegemony of the dollar is not the result really of government fiat. It's the result of decisions by millions of decision makers in commerce and banking and finance all over the world. Some of them, of course, quite centralized in big businesses that use the dollar because it is highly efficient as a way of conducting business. And markets have a logic which is, as it were, driven by scale. So once you have the depth of a market, that pulls people in. And the other thing one has to say, I think, is that insofar as one depends on the dollar, one does indeed fall to a degree under American hegemony. But rather unlike the checkered story that you were laying out so nicely for us a second ago about the ECB, one has to say that the Fed's system of hegemony has, to put it crudely, been a benign one. In other words, at the right moment, the Americans have ensured that there have been plenty of dollars to go round. And that was true in 2008. It was true off stage during the Eurozone crisis, particularly in 2011. And it's been true again this year, when in March, we were suffering some extraordinarily serious financial turbulence, which the Fed met with gigantic bond buying. And so that, I think, is one of the real dilemmas for a European democratic politics of money, is that we have to reckon with this entanglement, with dependence, and yes, to reverse the flow of my comments, with the possibility that this can be instrumentalized by the American nation state for quite hard power purposes.
Yes, you just reminded me that in the comparison between the ECB and the Federal Reserve in terms of the generosity as a hegemon of a currency area, and the currency area for the US is basically the entire world. For the ECB is the Eastern European backyard. Yeah. The ECB was far less generous with Eastern European countries that were dependent on the euro one way or another through the ownership of the banking system or through trade flows. Then the Fed was generous with the rest of the world, where at least with
even Poland, right? Even Poland couldn't get a swap line. Yeah.
No, we in Eastern Europe are treated like the poor cousins who have to borrow from the ECB if they have the right collateral. In some ways, in the same way that the Federal Reserve treats countries from middle income or low income countries, right? It's a relationship of dependency that is very strongly enforced by the ECB, and I don't think. And
it's rather odd because the Fed treats Mexico better than the ECB treats Poland.
Yes, it does, and it's quite a paradox that the Fed treats better Mexico during a Trump regime. And in a sense, the Fed came fully into its global lender of last resort function under Donald Trump, whose entire, at least the narrative we have of Donald Trump is that Donald Trump is against globalization. But somehow here, I think people lose the distinction that is very fundamental between real globalization and trade wars and financial globalization. And financial globalization, as you very aptly described it, which is composed of very many complicated networks of interconnectedness between financial and non-financial actors, that is very much alive and well. And the Fed is there in the driving seat. And I think, and probably we should stop here, but if Joe Biden wins the election, then the Fed will recover its role as a hegemon in the field of green finance and the climate crisis as well.
Yes, you can already see that beginning to happen in California within the Fed system. The Californian Fed branch has actually been pushing quite hard in this direction. So I'm sure you're right on that score.
This was almost perfect timekeeping. So thank you so much to the two of you for this very rich input. We have covered 3 blocks on the future of central banking, on what progressive politics on this may look like. We've learned that the premise of any progressive central banking should be the integration of fiscal and monetary policy, and that the independence of central bank, that paradigm that we started out with, then may only serve the creditors. So moving forward, the second block, I think we've really learned that under the current mandate that central banks have, that the Green Deal that's being pushed also in terms of monetary policy, also by the European Central Bank at the moment, is a matter of framing the issue by the central bank itself. So in a nutshell, if it poses a systemic risk to the financial stability in Europe, then the ECB may act and step in on that. And third, we have kind of maybe also to take it very briefly, that the hegemony of the dollar is here to stay, and that it may pose kind of a systemic barrier to any kind of like progressive take on democratizing the politics of money. So let's take these 3 big thoughts and blocks and conclusions into a 50-minute breakout session, and then come back and meet again here in the main room with Philippa Sigl-Glöckner and Christian Odendahl, who will also join us then after the 15-minute session. Hello, and a very warm welcome back to our main Zoom meeting room. You had a bit of time to discuss some of the initial inputs by Daniela and Adam. They are still with us, and as we announced earlier, now we're delighted to have Philippa Sigl-Glöckner and Christian Odendahl with us. So let's start with Philippa. She's the founder of Dezernat Zukunft, a non-partisan think tank aiming to rethink monetary, financial, fiscal and economic policy. And she's currently on leave from the Federal Ministry of Finance in Germany. So very warm welcome to you, Philippa. And Christian Odendahl is the chief economist at the Center for European Reform. Christian works on European monetary and fiscal policy, European integration and economic growth, financial markets, as well as German politics. So just as the beginning and the first conversation between Daniela and Adam, we will now add a little bit of German flavor to the conversation. And as you probably all know, Germany doesn't just have kind of one of the biggest economies in Europe. It has a very unique export-orientated economic model, but we Germans also have a peculiar relationship with money. And we love kind of carrying cash around all the time, even in times of a pandemic and when everyone advises us not to do so. But there are certain things that have built up over the last centuries that Germans find peculiar and about money. And there's also that the German wider population shares a special interest in central banking and to interest rates. Whereas in some other European countries, people would shrug their shoulders over what central banks do and what the interest rates are at the moment. In Germany, the Bild-Zeitung, one of the main tabloids in the country, regularly puts central banking and interest rates on their title page. So Philippa and Christian, may I just, before we dive into the conversation, just remind you to maybe use a kind of less technical language so some parts of our audience will be able to follow us, and that we at the end, and I think this I would urge all of us to do that, that we end up talking about a greater vision of kind of a progressive monetary policy, and that we can all take home some food for thought. But for now, Christian and Philippa, the floor is yours, and we're very much looking forward to the conversation.
Well, thank you very, very much for having us, and I applaud the organizers for putting monetary policy on the table for such a conference, because I think there is for us various aspects to discuss to make monetary policy more democratically accountable and more progressive. So, thinking about central banking, I think there are two ways to think about it. The first is sort of the approach that this is a semi-automatic technocratic institution to manage the money supply and keep inflation on a certain level, and that there's no other goal and no other target, and that the central bank is fully independent. This is close to the idea that I think many Germans have, particularly of how the ECB was set up and how it is supposed to operate. So one target, one instrument, one institution, but independent. And as Adam said, there's obviously clear sort of political and monetary interests behind this on the part of creditors to secure the nominal value of their claims. So this is sort of the first idea. And the second is that central banks are part of a broader toolkit of democracies, and they can be used to advance other goals of society, such as avoid or increase employment or the fight against climate change, etc. In that scenario, the central bank would not be as independent, may have more than one goal, which may come into conflict with others. And so it requires more democratic legitimation and coordination between the ECB and the governments. And I think there are good arguments in favor of both. I think the German argument in favor of the first approach is, of course, that politicians cannot be trusted, that the ECB cannot have more than one goal, lest it gets sort of biased against price stability, and that the central bank financing governments ultimately leads to overspending and to inflation, and that the central bank in general should stay out of political issues and just provides stable money and inflation, and that this is the best it can do. So I think these are the two sort of broad ideas of central banking. Would you agree, Philippa?
Yes, I would agree, but I would then, because I think that was also slightly our task, go to the German experience, because I think it's very easy to draw a bit of a caricature of Germany in a way, and say, okay, well, this model of independent, technocratic central banking that's only focused on inflation, that doesn't see the bigger picture, was invented in Germany, and the Bundesbank is the example for it, and that's why Germans want a strongly independent central bank, and it can't be any different. And that plays a huge role for Europe, because the ECB was modeled on the Bundesbank in a way. And actually what's interesting when you look at the history of the Bundesbank, it wasn't always so clear that it should be a really independent central bank that's not under the influence of politics. There was a very interesting recent PhD thesis by a guy called Simon Lee, who I think worked for the FT at some point and was a journalist, and then started to dig into the history of the Bundesbank and looked at where actually this independence paradigm came from. And his argument is that it was a really well done press campaign by the predecessor of the Bundesbank and the management of the Bank of the Länder, which was the predecessor of the Bundesbank, who were advocating really, really strongly for having an independent central bank, because they also liked their independence. And actually the first Chancellor, Adenauer, really disliked that idea quite heavily. He even said something like, how can you have an institution that's answerable to no one, not even Parliament? He thought that was quite outrageous and not very helpful for economic policy. So I think it shows you that even in Germany, it wasn't always so obvious that that one technocratic model of a central bank is really the right one. And over history, the role of the Bundesbank and how independent it was, and the relationship between government and the Bundesbank has been changing a lot. From 1966 to 72, under Karl Schiller from the SPD, there was even this idea of we should have Globalsteuerung, so global control of the economy, and use all levers we have to control it, including the central bank. And an independent central bank isn't so helpful for that. So I would really argue it's quite a recent idea in a way. I think, as Adam said earlier as well, not even Germany is so clear what that relationship between state and the central bank should look like. And in 2014, I mean, the head of the Bundesbank, Weidmann, started to actually kind of go back to talking quite actively about economic policy and even what salaries in Germany should look like and how unions should negotiate, which I think at that point surprised a lot of people, because he was even as clear as saying unions should really bargain for 3% wage increases. So even in Germany, I think the history is a little bit more mixed and shows you it's not so obvious. Maybe Christian, I think you wanted to talk a little bit more about what Adam and Daniela mentioned earlier. When we have these big tasks in hand, what the right model is.
So I think you raise an important point, that this is changing over time, and I think this is one of the key takeaways is that it's not always been like this, and that the circumstances in which a central bank operates do change over time. So, for example, in the 1970s, the inflationary forces were relatively strong. Labor unions were quite powerful. Income was not distributed as unequally as it is today. So there was much of a push towards more inflation. And the challenge now is not to contain inflation, but actually to generate it. And this is in line with what Jens Weidmann said at the time. That in turn means we may need fiscal policy to play a much more active role to generate sufficient demand in the economy and ensure full employment. But that would mean that the central bank needs to stand firmly behind government debt, also in the Eurozone. Climate change is happening, so we may need to enlist all government institutions in the fight against climate change, including the central bank. And the geopolitics has changed in a way that we as Europeans might want to have a dominant currency with which to shape the world, just as the US has the US dollar. So this is all a long way to saying circumstances change, so we should rethink central banking in that same light. And I think Daniela and Adam raised a few important points on this. So greening monetary policy, let me just quickly briefly talk about that and sort of what the German counter arguments are. And there are two issues. I think that the first on greening monetary policy is, of course, that the ECB needs to take into account climate risks for companies, for assets, for the economy, such that, brown assets on banks' balance sheet, for example, may pose a risk that the ECB may want to take into account. This issue is less controversial, right? The ECB needs to take those risks into account. That alone is not greening monetary policy as such. In my view, it's just rational monetary policy that we take all available risks into account. The other is, should the ECB actively subsidize green investments and to make sure that green bonds on markets have a lower interest rate than conventional bonds? This is a lot more controversial, and the counter arguments are that climate change is a job for policymakers that regulate energy markets, set a carbon price, and so forth. And this is nothing that the ECB needs to get involved in. But I think, considering the size of the problem and how difficult it is for policymakers to commit to long-term climate policy that long-term investors can count on, I think we should think about enlisting the ECB in this. And ironically, in my mind, at least, there is a political failure of politicians to be able to commit to long-term climate policy And ironically, this argument is used by those who favor an independent central bank, namely that politicians cannot be trusted. So I think, you know, the same argument that applies for independence also applies for more active central bank role in assisting the fight against climate change. Of course, fiscal policymakers need to play probably the more prominent role in this, and this is probably my main reason for skepticism about greening monetary policy, is that how much good can it do, right? Those investments that are funded on bond markets may not need that little bit of funding advantage that the ECB can generate, whereas innovative approaches, new technology and so forth, they may need risk funding, and risk funding is not something that the ECB can subsidize, at least not alone. But I think the greenwashing aspect that Daniela raised is very important. So if we decide to green finance and to green monetary policy, then the issue of what is considered green and what is not should not be outsourced to private entities. This is a democratic decision that we need to be making, and thereby we can assist the ECB via democratic means.
All right. I guess one of the issues, and that's where especially I think the strong advocates of independence, of central bank independence in Germany jump on the ship, is the more you get into the whole question of bond buying and which bonds are we allowed to buy, and, you know, whether it's companies or might be governments, there comes this really worrying term of fiscal monetary coordination, because by buying bonds, you know, you're enabling the government side, in a way, fiscal policy, governments to spend money. And Isabel Schnabel just recently gave a speech where she said, yes, I mean, you know, if fiscal policy goes the right way and monetary policy and somehow they're aligned, it's a good thing, but please, can they not coordinate? That's a really bad thing, because you want central bank independence. So this has been a really big question. Are you allowed to do that, or is this a bad thing? If we want to answer all these big challenges that Christian has now kind of mentioned again, it's probably something we need to look into. But maybe before I go into the German arguments of why we sometimes are so skeptical here in the debate, I quickly want to mention in what way you can do fiscal monetary coordination. So one is what we just mentioned, is if a central bank keeps the costs down of certain debt, by, for instance, saying that it accepts it as collateral, or it guarantees certain debt. And the other option is you can just straightforwardly buy it. So, I mean, it's quite helpful for governments if they know the central bank is going to buy their debt, maybe even without limit, because you have a huge additional buyer in the market. The nice thing is if they buy it directly from you, in Europe, that's not allowed, so the ECB can only buy in the secondary market, which means government needs to sell bonds in the market, and then the ECB can come and buy that off the players in the market. So these are two ways in which, I mean, if they talk to each other, central bank, government can support each other and be a lot more powerful in a way in answering all the big challenges, because they can agree on what to do with green bonds, or create safe assets so that the euro becomes a big important currency, with bonds that everybody wants to buy. Now, why are we so scared of that in Germany sometimes? Well, first of all, you say there's a big risk that the central bank really isn't independent anymore if that kind of coordination happens. In particular, if governments can make the central bank buy its bonds. It's called fiscal dominance, and there's worry right now that this happens because governments are issuing a lot of debt, and then the central bank, in a way, one could argue, is forced to pick it up because otherwise bad things happen. The second worry is that central bank really, and it's a bit related, if it's not that independent anymore, it can't really focus on controlling inflation. And this, obviously, in Germany is our biggest risk, because we still have that trauma from back in the day, that we had hyperinflation in the Weimar Republic. So we really want the central bank to focus on inflation and not to do some funky stuff together with the government, where they can issue lots of debt, push lots of money in the economy, and then make sure it overheats. I think, as Christian said earlier, maybe that's a bit chasing the ghosts of the past, because at the moment we really have a problem with too little inflation and not too much. Today at the press conference of the ECB, Lagarde was very, very careful to say we don't have deflation, but actually prices are kind of lower than they were before. So I'm wondering whether that's really is an argument that goes so much at the moment. And then the second argument, and again I think it's a bit of a German one, is but then governments overspend because they know that the central bank buys it. I'm not sure that's really necessarily the case. And there's a very interesting paper by Josh Ryan Collins from UCL who wrote on this in Canada and showed how when you have a framework around it and the way you do it, you can do it in quite a reasonable way, and there's no reason why it should suddenly kind of throw loose or boundaries. And to be honest, I mean, if it's your own currency and you spend too much as government and your central bank buys it, you will just get inflation. So there is even a limit to it. There's not really, so it's not really clear to me why this should always happen. So maybe this term sounds scary, but if we actually want to go into these challenges, answering these challenges, fiscal monetary coordination is something we need to look more seriously into in Europe, especially if we want to have a euro that plays a big role in the world and that's a reliable currency that can kind of match the dollar. And I think Christian has something to say on that one.
Yeah, I think that's a very important point on the coordination between monetary and fiscal policy, not just for fighting the aftermath of this COVID crisis, but probably more in the medium term. We may have a sort of a chronic demand problem, and that the fiscal policymakers may need more room for maneuver than we currently give them through the fiscal rules, but also through sort of the ambivalent backing by the ECB, which other countries, for example, in the UK or the US, do not have. There's a very clear commitment that the Bank of England or the Fed will back the respective government debt. And if we want the euro to play an international role, then we will have to have a safe asset in Europe, and this is government bonds, or ideally a truly European bond, to play the role as a safe storage of value for people to invest in. Of course, again, this is a political decision of whether we want the euro to play an international role, but the geopolitics has changed quite a bit. And with a dominant currency, a country can gain influence in other countries' policies. It gives other countries the option to diversify away from the dollar, and be less under pressure by China, for example, to export its currencies to countries and so forth. So there is probably a geopolitical value in having a stronger role for them. But that would involve the ECB to have broader mandates in two ways. One is to firmly stand behind government debt, no questions asked, because we do need an ample supply of safe assets. And the second is, if there is financial trouble in a euro-dominated financial market, the ECB will need to step in, just as the Fed during the 2008-9 financial crisis, and recently did, as Adam has alluded to, even during this COVID crisis. So again, and this is the counter arguments there again, if we task the ECB with issues that are not firmly within sort of the price stability mandate, then the ECB might be tempted to pursue other goals and risk price stability. And this is where sort of we come back to the issue of independence and democratic accountability. Do we want to enlist the ECB as an institution in our democratic tool set and to achieve our goals or not?
Sorry, can I just ask you one question on the international role? Because it's always assumed that it's so obvious that we want the euro to play a bigger role, match the dollar. And I mean, partly from a government perspective, I very much see that point, because Americans can do certain things because they control the dollar and essentially global payments. But on the other hand, I once read a statement by a currency analyst who said, well, essentially the Fed is the central bank of the world, and that's what they need to look at when they decide on their monetary policy. And to me, that sounds like a massive headache, because you can't really look after your own country. You need to do monetary policy for the entire world. We already see how hard it is to do monetary policy for Europe. Is it really always an advantage to have a currency that has that big a global influence?
No, I think having a global currency is a political advantage and a massive headache, in the sense that you are in charge not just of your own monetary policy, but the monetary policy of the world, and you sort of play banker to the world as well, right? So you are the country and the currency in which people want to store their value, and you in turn invest abroad in risky assets. But that means sort of when a crisis comes, then you also take a big hit and need to supply the rest of the world with euros. So I don't think that is not easy, but I think we all stand to benefit from having a more diversified set of global currencies, rather than putting all the trust in the US dollar and having the US play the role of consumer of last resort for the entire world. I don't think this is a stable or necessarily optimal arrangement. I think the world is big enough to sustain two global currencies, and the option to diversify, I think, gives us both economic and political benefits. But it does involve, headaches in terms of how you pursue your own policy. And this is precisely why more conservative minded people are quite skeptic about the ECB and the euro taking on that role, because then there are additional tasks and additional asks of the ECB as the monetary policy makers, when we even struggled with having the ECB manage sort of the European setting, as Daniela and Adam talked about before, when some Eastern European countries, non-Euro Eastern European countries, came into trouble and needed Euro funding, the ECB was not willing to extend that kind of funding to them on generous terms. And this is one of the reasons why I think there's a lot of skepticism. But again, it might be a worthy goal to try to gain more geopolitical influence by having a stronger euro, have the euro play a stronger role in the world. But that would mean we would need to task the ECB with quite a bit more than what we're willing to do at the moment. But I'm conscious of time, and I think Florian wants to jump in.
Christian and Philippa, thank you so much for these reflections and giving us the German take on this. We said that we would bring in some questions from our Zoom chat, and one question to start with is on greening monetary policy, and we've kind of come to the conclusion that it's quite rational for central banks to act upon this, and we said that there might be progressive or more reactionary ways of, how this can be taken forward. Maybe from your perspective, Philippa, how do you see kind of a more progressive approach to actually coming to terms with greening monetary policy? And I think a question that is related to that, do we then need to, if we give central banks a more political mandate, do we then need to redraw and rethink our political institutions, or where does the democratic legitimacy for Europe or for European Central Bank or other central banks to act upon this political mandate come from?
Thank you very much for that question. It's a really interesting one. So I think in terms of what does progressive green central bank policy look like, I think mainly the important thing is that it is green and that it's not ignoring the issue, because as a central bank, you're never neutral. I mean, when you buy bonds that are green, you give them an advantage. If you don't, you give them a disadvantage. So I think it's mainly important that you take it into account where the progressive comes in, and you mentioned it already, is, where is the political frame? And where's the political counterpart of the ECB that sets the frame and that works with them? And that is what was a lot easier, I guess, in the German context. And that's, I think, how over the years we could reconfigure the role of the Bundesbank and the relationship between the Bundesbank and government, because they had a counterpart. So, depending on your issue at stake, you could kind of figure it out again. Now with the ECB and with green policy, it's kind of hard because they don't have a finance ministry that sits opposite them and that they can talk to. So I think when you think about active, aggressive policy that you really want to shape and where you want to make sure that it has a proper kind of democratic footing, then what you really need to look at is how do you create that political counterpart of the ECB in Europe. Essentially, I think that's a European treasury that has a proper link in the end and back to Parliament.
Okay, thank you very much. Also, I think another question that comes from the chat is, and referring to the conversation that maybe Adam and Daniela had, when we listened to your conversation, one could feel that there's quite a bit of reservation, maybe even a little bit of pessimism. So maybe going forward, is that feeling kind of justified, or are you more optimistic when it comes to kind of a new mandate for central banks? And if so, why would that be the case? Maybe Daniela can start first.
Thank you. I mean, I think if we sounded pessimistic about the politics of changing central bank mandates, I would identify myself as a pessimist, in the sense that this opens up cans of worms that I don't think we want to open now, because, as Adam mentioned, I don't think we have the kind of politics on the level of governments and political parties that would necessarily lead us into a progressive direction. For a variety of reasons, I'm not quite sure that starting to think through just changing the central bank's mandate without working on the side of changing the language in which we speak about fiscal policy issues, about economic management in general, about the relationship between fiscal policy and monetary policy, until we make these issues more easier to understand, less technocratic, and I'm sure that we sounded quite geeky and complex in our interventions. I mean, this is a problem in the sense that global finance is complex, central banking is complex, and democratizing this without doing a lot of work of language and grammar is difficult. So there is a very steep hill ahead. Maybe Adam wants to add onto the idea of how do we mobilize language in a way that serves better progressive politics and can open up fronts for redirecting central banks in a sort of progressive space, or pointing them towards a progressive direction without running some of the risks that we discussed, particularly in them being sort of taken over or occupied by regressive or nationalist forces. And I'm thinking of Hungary, for example, very close to where I'm from, is a good example of a government that takes over the central bank and in a sense promotes a particularly, for progressive purposes, and not a very particularly palatable agenda.
So Adam, why can we be more optimistic, and if so, why?
I mean, I've publicly advocated for mandate change, but I don't think I do it from a particularly realistic point of view. I do it because I think it's worth saying these things publicly, because the European conversation about central banking is so hidebound and so constrained that it's worth sometimes just sort of smashing the glass to see what happens. But I'm with Daniela, I think, the practicalities of making that the key agenda point right now. I'm impressed by the imaginative way in which the current leadership of the ECB is extending the scope for action. But as I was saying earlier on, as a matter of realistic action, big things change when powerful people want big things to change. They don't change because they're a good idea. They don't change because we like the vision. They change because people with real clout and real influence who set terms and constrain choices decide that it's fundamentally in their interests. And I think we are at that point with climate change. So I think, as it were, it's a question of, as it were, finding ways of progressively inflecting a current of movement which is happening now because climate change isn't some sort of optional thing, right? Very bad things are going to happen, whatever we do. And the only choices now are, as it were, how we constrain the damage, how we manage the damage, how we manage the redistributive impacts of this. And even the most powerful people have woken up to the reality of that. There's nothing about the climate picture, if that's what we're about, that should make anyone optimistic. Short of some miraculous technological breakthroughs about carbon capture in the next 20 years, which we're spending no money on developing, peanuts. It's really Austin Powers sort of $1 million. Like, it's absurd, the lack of commitment to major technological investment in that area. Without that, the outlook is, profoundly pessimistic. The world that we're headed towards is a 2 to 3 degree world of change, and that has disastrous implications. So no, I mean, I'm not optimistic. I think mandate change is the right thing to talk about, not because I think it's going to happen, but because it changes the nature of the conversation. And what I think realistically is happening is that the scale of the emergency is now alarming people who do have real clout. And that's what's enabling, as it were, the conversation to shift in the ECB realm and the central banking realm. And so then within that, as it were, constrained situation tactically, the question is how one inflects this.
Okay, thank you very much.
Can I add one sentence on language?
Philippa wants to add, yeah.
Sorry. I think on language sometimes, or in a narrative on central banks, and when we don't understand, well, maybe we can't understand it anymore because it doesn't make any sense. And today, when we talk about central banks needing to inflate asset markets or, pushing lots in bond markets and holding back inflation, when really the problems are different ones, I mean, you can't understand that because it's not the reality we face, right? I mean, in Southern European countries, you have tons of young people out of employment, and as Adam talked about just now, we have a climate crisis. So sometimes it's also a good sense check, and maybe we need to change our language because actually, we're completely off the subject matter.
As we're need to draw to a close, there's a final question for Christian, which is, how would a democratic central bank structure for Europe look like? Philippa already mentioned the kind of European Treasury. What else would need to happen to move the ECB to a more political mandate and also inject maybe democratic accountability into the system?
So I think the current setup is very difficult to change. This is, I think, what Adam also alluded to, that changing the mandate in this current setup is probably unrealistic. So talking about it changes the conversation, but I'm skeptical that we can change it. Currently, the ECB is set up as completely rock solid independent, and it is actually not allowed to take any orders from anyone. And that is, limits quite clearly the democratic accountability of the central bank. Of course, the central bank can sort of, by its own interpretation of its current mandate, extend the scope of what it does. And this is what it's currently doing with green monetary policy. I think 5 years ago, people wouldn't think that the ECB would dare to do that. And now it seems to be happening. We saw, for example, the Federal Reserve in the United States just recently had a strategic review of how it wants to conduct monetary policy, and shifted its policy stance quite a bit. I don't want to go into the details, but the thing is, where do you put your priorities on, and how do you change? So I think the ECB is responsive to sort of the discourse, but there's no formal measure in which this can happen other than the ECB engaging in the conversation with the European Parliament, with national parliaments, and the general public. And so I think it is slowly changing, but a sort of formal democratic mechanism is in current treaties out of the question.
Well, thank you so much to all of you. There's a lot to take home and a lot to digest when we want to renew the mandate for central banking and the integration of monetary and fiscal policy. So thanks so much to Daniela, Philippa, Christian and Adam for joining us today. It was a great pleasure, and we really hope to see you again, and maybe even come together physically at some point in the future again. For everyone in the Zoom chat, please fill out the evaluation form which has been posted in the chat. We will now have a 15-minute break and continue at 8:15 with the next session. So don't forget to tune back in and listen to Beyond Humanism, looking at the future through the ecological lens, with Amitav Ghosh, Malini Mehra, Anne Pettifor, and Matthew Taylor. And the session is hosted by Hanno Burmeister. So we're looking forward to see you all back in 15 minutes or rethink monetary and fiscal policy in the meantime. So thanks so much to everyone, and it was a great pleasure having you all with us tonight. Thank you.